Hello and welcome to this week's weekly market report. My name is Ed and I am one of the energy traders here at Northern Gas and Power. The UK spot price increased 9.1% over the course of the week, rising from 2.7 to 2.9 pence per kilowatt hour. UK gas for power demand reduced from 25 MCM per day to 15 MCM per day, a fall of 39% from last week's average, while wind-generated power almost doubled to 10.1 gigawatts. UK continental shelf gas production fell 6.7%, from 71 to an average of 66 MCM per day. Over the same period, Norwegian supply via Langeld fell 6%, from 73.6 to 69.1 MCM per day. TTF prices were also up this week, increasing 11.3% to 3.3 pence per kilowatt hour. Renewable energy production has tempered the impact of market uncertainty this week. This was largely driven by concerns over potential disruptions to European gas flows caused by Ukrainian infiltration into Russian Sudza region. Asian spot prices increased slightly by 0.9% this week, driven by above-average temperatures across Japan, South Korea, and parts of China. There are also some unplanned nuclear outages in South Korea. The US spot price had the highest increase of all, going from 0.5 to 0.6 pence per kilowatt hour, an overall increase of 14.9%. Most of the gains were temperature-driven, with some support also provided by talks of a production restraint. The front-month gas contract increased 11.1% to 3.3 pence per kilowatt hour. We have seen increases across all curves to a lesser extent. Asian and European heat still had a part to play, but most of the increases seem to be driven by the uncertainty of gas supply between Russia and Europe via Ukraine. On the 6th of August, Ukrainian troops entered the Kursk region of Russia. This is the first incursion into Russia by a foreign power since World War II. This raised a lot of concerns about the continued supply of gas into Europe. Kursk is home to the last Russian transit station near a small town called Sudza, so any damage or disruption could potentially impact supply. A similar trend was observed across the TTF curve contracts, with front month increasing 11.6% to 3.39 pence per kilowatt hour, whilst the winter 24 contract increased 9% to 3.65 pence per kilowatt hour due to these uncertainties. The JKM price curves followed movements in the European and US markets, resulting in price increases for all contracts. Front curve prices were getting boosted by warm weather returning and fears of production restraints, while further out, loss of pipe gas availability to Europe will increase the demand for LNG from the US. Prices across the power curve witnessed week-on-week increases, with the front-month contract increasing as much as 8.63% from last week, with similar drivers to the gas curve. There are currently no UK nuclear reactors offline. However, there are 2 planned outages on the horizon for the remainder of August. Hartlepool 2 on the 24th of August, with a 595 megawatt reduction in capacity, and Heysham 1-1 on the 26th of August, with a 580 megawatt reduction in capacity. Wind generation averaged 9.5 gigawatts over the past week, well above the seasonal normal of 7 gigawatts, and an increase from their 4.5 gigawatts average of wind generation witnessed in the previous week. The coming week sees highs of 10 gigawatts and lows close to 4. The winter 24 and subsequent curve contracts witnessed price increases, mirroring the movement in gas prices. Gas-fired generation remains the primary source of marginal fuel in the UK, thereby dictating price trends across the country. UK and European spot power prices saw an across-the-board increase following the sharp rises seen in their gas counter. Strong wind and solar generation in the UK, however, averaging approximately 9.5 gigawatts and 2.5 gigawatts respectively over the last week, has limited the upwards trajectory of the day-ahead power contracts to just 2% week-on-week. Weak wind and hydroelectric generation pushes Nordic prices lower week-on-week. Temperatures across northwestern Europe have remained above seasonal normal levels over the last week, thus increasing demand for cooling in these regions, straining short-term supply and therefore increasing spot prices. French spot power increased 42.18% week-on-week as the country's nuclear production slides downwards, seeing a 15,410 megawatt reduction in total capacity due to planned maintenances at 14 reactors and 1 unplanned maintenance. Thank you for watching this week's market report. Be sure to check out our LinkedIn for more.